A restaurant, retailer, and investment banker populate this week's list of top stock picks. Tracy Reinick, you have the restaurant.
Yes, Red Robin Gourmet Burger. Burgers are hot. They have about 460 stores in the U.S. and Canada. Most people know them because they're kind of family-oriented, casual dining, but they are trying to change that reputation a little bit. They're remodeling a whole bunch of their stores to try to get a little broader audience than just the families and like the teens and tween age group. So we'll see. We won't really know until the summer how that transformation is working out for them. But right now, they're doing pretty well. They beat on the last quarter substantially. Their margins did improve. They're seeing a little bit better costs on beef right now, so that's helping them. Interestingly, they didn't give first quarter guidance in their last report, but they gave full year, and the analysts kept trying to pressure them, like, what about the payroll tax and the delayed tax refunds, and they refused to answer. So I don't know about how first quarter is going to be, but for the full year, they said anywhere from 2 to 3% same-store sales growth, which in the restaurant industry is actually doing quite well right now because the casual chains are having these issues with the payroll tax and the delay in the refunds. So, you know, things are going pretty well for them. They're only expected to grow earnings about 6% this year, though, and they're trading around 20 times. So they're a little pricey here, but they are Zach's number one because the analysts all like the story for what's going to happen in the rest of the year. Okay. Kevin Cook, you have an investment banker.
Evercore Partners, boutique investment bank, no prop trading, no, none of that funny stuff. They killed the traders. They just focus on M&A, divestitures, that sort of thing. This is a company that, M&A has really come back in the past few years, not to the, pre-2007 levels, but they struggled for a little bit in 2010, 2011. And then late last year, they got the big Kraft deal where Kraft spun off Kraft Foods. That was a $36 billion deal. And, estimates, it was like a rank 4 or 5 here at Zach's, and the estimates started to turn around, and this stock just took off when it became a rank 1 or 2 in December and January. Went from the mid-20s up to $44, a new high just last week. It actually got downgraded from market outperform to market perform last week by JMP Securities. But I think the stock is a buy anywhere near 40. And this is just such a unique company. Roger Altman ran M&A for Blackstone. He's the founder, and a guy named Ralph Schlosstein is the CEO. He did M&A, or actually he was a co-founder of BlackRock. So these two guys are like, Wall Street insiders. They've been embedded. They know how to do things, but they're also diplomats. They both work for the Treasury. So that's why they're like the kings of deal makers. They really know how to bring deals together. They just crossed the 1 trillion mark for deals in their history since 1996. And they're also at the center of a big deal we're all talking about lately, and that's Dell, where they are advisors to the board. So while everybody would love to see the founder take his company private, Evercore is in there advising the board and obviously attracting these outside bids from Blackstone and Icahn. I was going to say Ackman. You get those guys confused sometimes. But so that's how. And either way, whatever deal happens, Evercore gets paid, as the consultants to the board. So I think it's a strong business you want to look at. Yeah, the stock has run quite a bit, but these are premier players here, and I think anywhere between 38 and 40, you want to be a buyer of the stock.
All right, Kevin Matris, you're into drugs this week.
Yes, I am.
Drug retail.
Right. Yeah, mine is CVS, Caremark, ticker CVS, and they are one of the largest pharmacy benefits managers out there. And of course, they have a drug, retail chain as well. But just to give you an idea of their size, they facilitate over 1 billion prescriptions a year, so they are huge. The thing that I like about CVS, though, is that if you take a look at their sales and if you take a look at their earnings, they are both at record highs. Their customer base is continuing to expand, and it's expanding because they are winning over new contracts from their competition. And now with Obamacare, the law of the land, you're going to see their customer base grow even more. Also, too, since there are more and more people going to CVS to fulfill their subscriptions, they're stopping in at the stores and they're buying more stuff. So I just think it's a great place to be right now. Also, if you take a look at their industry, I mean, Zacks has rated them in the top 5% of Zacks ranked industries. So they're a leader in their industry. The industry is one of the best ones, and I think that their uptrend is going to continue. I have a price target on CVS of 65. That represents a 17.5% potential gain from here. Then throw in their 1.8% dividend, and I think you've got a really good potential gainer for the future.
All right, thank you all for that. And don't forget, you can check out articles by these folks and other strategists on Zacks.com. If you haven't already, get on over there because those articles change frequently with everyone here. I'm Terry Ruffalo.